Right now, the entire Bitcoin market is just holding its breath. You can feel it. For weeks, the price has been coiling up like a spring, and the one question on every trader's mind is, which way is this thing going to break? To figure that out, we've got to look past all the noise and focus on 5 critical signals that are telling the real story.
Yeah, the best way to describe the mood right now is just tense. The market has completely stalled out, and it's created this palpable sense of anticipation. And, let's be honest, a little bit of anxiety. It really feels like the calm before a storm.
And this number is at the very heart of the stalemate, $112,000. Now, while the price has poked its head higher, this specific level has become a stubborn ceiling. Every single attempt to break through has been beaten back, creating a really clear battle line between the bulls and the bears. And all that tension, well, it's fueled some serious fear. We're starting to hear more and more chatter about a major crash. Some are even throwing around a 30% drop. But is that just market jitters, or is there actually something to it? What are the underlying signals really telling us?
That's exactly what we're going to unpack right now. We've filtered out the noise and boiled it all down to 5 critical signals. We've got 3 bearish ones, 1 massive bullish counter signal, and then this one huge external factor that could honestly decide everything. So let's break it down.
First up, let's dive into the bearish case, because you really can't ignore it right now. There's this growing chorus of traders who are looking down, not up. They're predicting a pretty significant price drop is on the horizon.
The first specific target on their radar is $106,700. Now, what's so interesting about this number is where it comes from. It's derived from the exchange order books. Traders can see this big pool of liquidation sitting right there, and the fear is that it could act like a magnet for the price if we start to head south.
And of course, then there's the big one, 100 grand. This is a massive psychological and technical level. For so many people, this is the ultimate line in the sand. You know, a drop to here would be a major test of this bull market strength.
And then there's the worst-case scenario that's being talked about. Some analysts are looking at a full 30% correction from the absolute peak of around 124K. And if that happened, it would take Bitcoin all the way down to $87,000. It's a scary number for sure, but it's one that's on the table.
Okay, the second big bearish signal comes from the biggest players in the game, the whales. These are the largest Bitcoin holders, and they are selling. What's making people nervous is that their behavior is giving some analysts a serious case of déjà vu. It's echoing the same patterns we saw right before the 2022 bear market kicked off.
Just get a load of this. In the last 30 days alone, whale wallets have shed over 100,000 Bitcoin. I mean, to put that in perspective, this isn't just a small sell-off. It's the largest 30-day drawdown from these big holders since the middle of the 2022 bear market. That is significant.
So what does that actually mean? Well, according to analysts at CryptoQuant, it's a clear signal of, and I quote, intense risk aversion. When the biggest fish in the sea are this actively reducing their exposure, everyone else sits up and pays attention. It suggests they think trouble could be right around the corner.
Our third bearish signal is a bit more technical, but it is flashing a classic warning sign. Over on Binance, the world's largest exchange, there's a key indicator in the futures market suggesting that selling pressure is quietly building up under the surface.
The indicator is called the taker-buy-sell ratio. And simply put, it just measures how aggressive buyers are versus sellers in the futures market. If the number is below 1, it suggests sellers are being more aggressive. If it's above 1, buyers are in charge. Simple as that.
Now, here's why this is setting off alarm bells. We're seeing a pattern where this ratio is making lower and lower lows, meaning selling pressure is quietly growing, while Bitcoin's price is just kind of holding steady. This kind of divergence, where the underlying momentum is getting weaker while the price stays high, is the exact same pattern we saw right before the major correction at the peak of the 2021 bull run.
Okay, so that's 3 bearish signals stacking up. But all of this is happening in the shadow of our 4th major factor, the macro environment. This week is huge. We get critical inflation data, and we get a massive interest rate decision from the U.S. Federal Reserve. And you can really see the stark contrast in global policy here. While other major central banks in Europe, the UK, and Canada have been busy cutting rates, the U.S. Fed has held firm with 0 cuts. It's like the Kobu Easy letter put it, U.S. monetary policy is in its own world.
But here's the twist.
Despite the Fed not doing anything so far, the market is now completely convinced a rate cut is coming next week. It is fully priced in, and that creates an incredibly high-stakes moment. If the Fed delivers, it could pour fuel on the fire. But if they don't, it could trigger a massive wave of disappointment across all markets.
And that brings us to our fifth and final signal. And this is the crucial bullish counter-narrative. Because just as all this fear seems to be peaking, the big institutional money, well, it's telling a completely different story.
Just look at this. The data from last week shows an absolutely incredible reversal in where institutional money is going. While Ether-based products saw a massive outflow of over $900 million, Bitcoin products brought in nearly $444 million. So in short, big money is literally rotating out of Ether and flowing directly back into Bitcoin.
And this isn't just some random blip on the radar. Experts like Andre Dragos over at Bitwise are calling this a renewed re-rotation. It seems like the buzz around an Ether-led market is cooling off, and institutions are once again choosing to put their capital into Bitcoin. That is a powerful bullish signal right in the middle of all this bearish noise.
So, let's put it all together. The big takeaway here is a market that's in this perfect, tense equilibrium. It's a real tug-of-war. On one side, you have strong bearish signals. Traders are targeting lower prices, whales are selling, technicals look weak. But on the other side, you have this incredibly powerful bullish countersignal, with institutions rotating back into Bitcoin. And right in the middle of it all, you have the Fed, whose decision this week could be the ultimate tiebreaker.
Which brings us to the final burning question. You've got two of the market's biggest players, the whales and the institutions, moving in completely opposite directions. And it's got the price totally stuck in the mud. So the question is, will the Fed's decision this week finally be the catalyst that breaks this deadlock and tells us where we're all headed next? This week, everyone is watching.